Khalid, if I could turn to you to start. The past 2 years in the Middle East have been shaped by the fall in oil prices and by the government response, the structural reform programs and spending cuts. How has that affected the hospitality sector in the Middle East? How do you feel about what has happened over the past 2 years?
Well, the hospitality, like all other sectors, has not been immune. It has been impacted, I would say, very much in certain countries, not that much in others. For example, Dubai, I don't think it was impacted because of the business model that and the main segment of Dubai, which is not necessarily the government business, but rather than FIT and tour operator business. If we go to Saudi Arabia has been impacted because, again, it was most of the business was driven by government spending and oil and gas companies. Same, I would say, apply for Qatar. Abu Dhabi, even though the average room rate has been impacted because of the shift of the segment between government oil and gas to FIT again and tour operator at the expense of the average room rate. So Abu Dhabi was still witnessing an occupancy which is very acceptable. I believe that the overall occupancy of Abu Dhabi was something like 77%, which is quite healthy.
But so the occupancy rate in Abu Dhabi has maintained a strong level, but the RevPAR has dropped in the past couple of years.
Yeah. The average room rate or the RevPAR was falling year on year, 2015 and 2016. We anticipate slight improvement in 2017, but I would say that the game now is occupancy, and
so it's about volume.
Yeah. Knowing that the uncertainties, it's still in place in the region. We still have lower oil price, and we are still in that political turmoil.
And would you say that, so from what you have described, it's the downturn in business as a result of oil prices, that's been the primary effect on the tourism sector? It's the business traffic that has fallen away?
As I said, in Saudi Arabia and Qatar, it's the business traffic which basically impacted dramatically both occupancy and average rate. Mainly if we take Riyadh, for instance, and the Eastern, where oil and gas is a prime catalyst for business in the east of Saudi Arabia. I think same applies for Qatar. The difference that we have observed is Abu Dhabi and Dubai. Dubai was able to maintain the rate, of course, lower than previously, but that due to the supply and demand rather than I think that the oil price, because the segment is completely different. Abu Dhabi was able to relatively quickly replace that loss of business from the government and oil and gas by the tour operating and by offering packages. So the Abu Dhabi tourism entity, they were able to react with the hotels, and they came up with innovative packages that were allowing them to sustain their occupancy levels.
Okay, thank you. Now, Jonathan, if I can turn to you. So you have called this year's AHIC conference Catalyst for Change. That is the theme. Why have you called it that? What does that refer to?
Well, I think if I can just step back a little bit, we've been running the Arabian Hotel Investment Conference with, of course, yourselves, Richard, for the last 13 years. And we've seen the ups and downs, of course, over this period of time. But what I've seen significantly is the growth in the interest in governments from around the world who are looking at improving their tourism infrastructure. Particularly with the price of oil now declining, you're seeing places like Saudi, you're seeing places in Africa. So we've got infrastructure conferences, hotel investment conferences in these markets because these governments are absolutely keen to develop that side of their economy. Iran, for example, we have a conference there starting tomorrow with 300 delegates. Again, they've got one branded hotel, a population of 80 million people, a young population. They're desperate to catch up with the rest of the world.
So for the Middle East, though, or let's call it the GCC market, if we focus on that for the moment, we've seen heavy investment in infrastructure and facilities over the past 15 years, which puts it on a slightly different trajectory or location on the cycle to, say, some of the sub-Saharan African markets. Where would you say, in your many years' experience in this industry, where is the GCC at the moment? Are we in a period of oversupply? There's a sort of lots of capacity and a slowdown in the business traffic, or is it what sort of where are we in the cycle, I suppose?
Well, I must say, I think the region is a great hub, or Dubai, Abu Dhabi is a great hub for the rest of the region as well. So you will have a lot of regional offices here for Africa and other places around this region. So no, I'm very positive. But where I think, and the catalyst for change idea, is we've got issues coming up that Khalid, I know you're going to speak on, but there's issues that are coming up when you're operating a hotel, or be it OTAs, be it cost-cutting measures. How can we bring down the costs of running these hotels? You've got the global brands now coming in, and really, consolidating. So, is there an opportunity now for the independent hotels in this market, mid-market hotels? Tremendous opportunity.
So there's a diversification of the product offering.
Absolutely.
I mean, that seems to me that's been a theme for quite a lot of years, and yet we've been developing the high-end luxury resorts for...
Well, why is it where we continue to develop the luxury hotels and resorts as opposed to looking at the mid-market hotels?
Look, if we look at the region in general, whether Dubai or Abu Dhabi or Qatar, even Saudi, even Riyadh, I think that we have a rich level that we don't no longer need those upper class hotels, because saturation. We reach a level that we need to look at different segments, at different profile of customers. So if we want to grow further, and I think that Dubai has already initiated that significant change in developing hotels, and they are willing now to develop 4-star mid-scale hotels, because if you want to grow and support all those infrastructures and to have them really efficient and productive, you need volume. So that volume cannot afford, not all of these customers will afford to pay 1,000 plus room night. And another element is that the people behind that growth and that volume, they are tour operators, so they will have to package all that, link it with airlines. So they have to come up with a package that can be paid by these customers, these end users, whether from Europe or from Asia. And I believe that's why today, even us at Abu Dhabi National Hotels, our strategy is to develop 4-star plus or entry-level 5-star hotels, because we believe that there is a need, and that's where we're gonna hit.
So where we are at the start of 2017, is that the primary objective of the Abu Dhabi National Hotels? You are one of the biggest hotel investors in the region, and certainly one of the oldest. Is that you're now going to be moving downwards into sort of upper 4-star and towards the mid-range market?
I wouldn't say we are moving down. We are moving up and developing hotels that are needed now. We have been developing luxury hotels, and in this business it's cyclic. So we believe that today there are enough luxury hotels in Abu Dhabi, and we will be developing hotels that are mid-scale, entry-level 5-star. And we will certainly be redeveloping again luxury hotels, but not at this time. I think maybe a few years ahead.
And what about wider regional development outside of Abu Dhabi? Do you see opportunities for Abu Dhabi National Hotels?
We are looking at Ras Al Khaimah as well. We are looking at other cities in the region, and we are open to any opportunities as it raise. Yeah. But we will be continue to develop hotels in the region, but with main focus on UAE.